This is Talking Capital Markets, where ideas drive the markets. We move past the headlines and into the heart of the deal, breaking down IPOs, M&A, governance, and the strategies driving real growth in today's capital landscape. No noise, no hype, just conviction, execution, capital in motion. If you're building companies, raising capital, advising boards, or deploying investment, you're not just listening, you're in the room. And now, here are your hosts, Mike Blankenship and Brian Jue.
Welcome to Talking Capital Markets with Mike and Brian, your go-to source for insights at the intersection of law, finance, and business. I'm Brian Jue, and as always, my co-host, Mike Blankenship. How are you today, Mike?
Doing well, Brian. I think things are going well, and looking forward to our great conversation today.
Well, Mike, you've been busy. Your firm, formerly Winston & Strawn, completed its transatlantic merger, and it's now Winston Taylor. So congrats there. And then 3 weeks, 3 industries, 3 major wins. It's like you pulled off the hat trick in the Stanley Cup, or got 3 goals at a World Cup match, or a 3-homer game in the World Series, including a grand slam as the walk-off. Congrats, Mike, on those 3 massive SPAC, de-SPAC transactions, and an absolute master class and elite deal execution. And that's why we're here with Talking Capital Markets. And we talk about how to do things, yes, but we also talk about our real life experience. And Mike, why don't you just jump in and tell us a little bit about all the great work that you've done in such a short period of time?
Yeah, we've been fortunate to continue to be part of the SPAC motion that's continues. I think we talked about it before on SPAC 2.0, but over the last few weeks, we've had a number of different deals signed where we represent either the target, which means the company that's going to go public through the SPAC, or represent a SPAC. So some of those wins have been great, and we've really enjoyed it. And I think, you're going to see more of these. We've got more announcements coming, more closings coming, particularly in the industries right now, as we sit in the middle of 2026, industries around, AI or data centers, computing, anything where we're seeing a lot of money kind of going into those areas. So really kind of finding that flow of money. And so we've been able to navigate those and work with a lot of different teams. It takes a lot. And I think I have a good team over here, a great team at Winston Taylor, our new name, Winston Taylor. I know you mentioned Winston Strawn, but yes, the team is both here in the U.S. and transatlantic. And, as I've noted before, we work on deals across the globe, working with stuff out of South America and as well as out of Asia. And I think, we'll be here talking about some of the other ones, but particularly around GPUs. We had one that went public, and it's been a really successful one that's really traded up and done really well. We've done a quantum one out of Switzerland. We're representing that company as we move through. That deal was announced. And so we see a lot of movement there, particularly on the quantum computing. There was an executive order signed today around that. So, even the president's signing stuff to try to get quantum computing. So I think we're going to see a little bit more money in that particular area as well. So capital markets are thriving. We saw that after the biggest IPO in the world, and continue to hopefully see more and more out there. There are certainly tailwinds that we talked about from a regulatory standpoint that have been very helpful for capital formation. So I appreciate, Brian. Thanks for the shout out.
A lot of people have brought that up about the SpaceX IPO. And I've heard all kinds of different opinion, including that it's going to suck all the money out of the room, all the dry powder, things might get stagnant, so on and so forth. What are you seeing right now? I mean, because I don't necessarily agree with that. I think sometimes you need just a watershed, a big announcement, something really big, and then it gets people motivated to look at other transactions. What are you seeing right now?
Yeah, I think it's a positive development for the capital markets, for the IPO market, that shows that something that large can come out, be oversubscribed, and really kind of jump up. I think that's helpful for the markets, to your point. I think you've got other industries like life sciences. Take a look at that. That's a very hot sector. We saw the largest life science IPO as well, which took a back seat to the news from SpaceX. But we are seeing a lot more of activity out there, and I think it's a positive thing. As we come into the second half of the year here, you really have a window between now, July, and then August. You've got kind of a lull picks back up after Labor Day, and then all the way through Thanksgiving. I think you're going to see a lot more activity, and then a couple weeks in between that, and then and Christmas and the New Year's. So there will be a number of transactions. I think. I don't think it sucked the air out of it. I think it brought attention to the capital markets, and I think you're still seeing exchanges compete for deals. You're still seeing money out there because a lot of it was sitting on the sidelines, money out there that people want to potentially invest and see it go up. And so, again, I think it's a good development.
Absolutely. And now Winston Taylor, right? You're a transatlantic firm. The firm that you did the combination with, they were a large law firm with a lot of history out of London. And we talked about this, you and I, the other couple weeks ago, about how once upon a time, we would look to. I mean, American companies would actually look at potentially listing on the AIM or something like that, and how that's changed and how everything's coming here to the United States. So do you see more of that? Is that part of the business combination of potentially bringing more companies from overseas here to the United States?
Absolutely. I think the firm we merged with has a number of life science clients. We have a Cambridge office in Cambridge, UK, that has a number out there because that's sort of the incubator for a lot of the life sciences. And they had a number of different types of companies that were routinely coming to the United States. And I think this will now solidify those staying with Winston Taylor as opposed to going to another US law firm. They did not have the US presence, but did have a number of sizable companies that might go public in the United States. And to your point, the United States has the largest liquidity pool. We have the most trillions upon trillions of dollars that people move around on a daily basis. And I think we're going to continue to see some of that as over the years, things grow, come from Europe into the United States, particularly out of the UK, working with tech deals, life sciences, anything around IP was very helpful to grab onto the firm and work with some great folks over there.
Oh, that's incredible. And that kills me because, and I know we've talked a lot about this, and I know this bugs me, but here we have all around the world enterprises that want to come to the United States and become publicly traded here because of our capital pools, because of the liquidity, because of the strength, Asia, Europe, everywhere. Yet there are so many American companies that simply don't get it and don't understand that this is an incredible opportunity for them, that the private to public arbitrage can work in their favor, that they can get more liquidity, they can get more access to capital as a publicly traded company here in the United States. And yet everyone else in the world sees that we got to get more American companies publicly traded as well, right?
Yeah, I totally agree. I think we have a little over 3,000. I think we talked about this before, a little over 3,000 US domestic issuers. And that's down significantly. I think it's down to a third of what it was 25 years ago. And so, that's a dearth of them. And a lot of that is held with, not a lot of different issuers that hold the size on that. Right. So, so several of them are in the $1 trillion. And, that does make an impact on retail investors as well as institutions. I do think it would be nice to see more go out to the public markets, see that there are reasons to do it beyond just saying you're public. I mean, you have, the new equity, the currency, so you can buy things with your equity. You can do various things. You have an ability to let your employees cash out, have liquidity in their own stock and or hold it and show that they really care about your company. I think there are a lot of different reasons to be public, and a lot of companies, fit that mold really well. And unfortunately, sometimes, outlast or outlive their private life and should probably go into the public. And if we can encourage more, like we're hopefully doing here, it'd be good. At least test the waters to see what it's like. Would be good. Of course, we've talked about IPO preparation and readiness, and that takes 12 to 18 months. So there is some conviction you have to make ahead of time. But I think there are real reasons to be public. I think there's going to be more. I think the arbitrage, to your point, is good. I think the funds out there that hold are starting to probably see some multiples that are better because it is harder to sell right now than it is to maybe go out and be public and then sell off that. So I'm really hopeful in the next, 6 to 9 months, we'll see a whole host of these that gives optionality to companies. The interesting part, Brian, is I think, with SpaceX, there was a large retail component, but much smaller than they expected or when talked about. I think if you can get retail involved earlier on in the pre-IPO type process, and we could figure out ways and rules to do that on private placements with maybe accredited investors and really getting it out there. I know we do it with crowdfunding and some other stuff, but if you can really encourage, real retail stickiness, maybe companies would want to be there too, because that way when they go public, they don't see you know, company stock go down right away. So we'll see.
I agree with you. I mean, and we've talked about this before too, that once upon a time, a retail investor could participate in an IPO at the ground level or very close to. These days, it's extremely difficult to do that. But I think and these are some of the things that we talk about here at Talking Capital Markets. Mike and I go through the preparation, what you need to look for, what you need to be prepared for. And there's more than one way to go public. We've talked about a number of those methodologies, and we'll continue to talk about that. And this is something that we just really believe in it too. I mean, yes, it's what we do, but there's this the public markets is just a way to really help build and empower wealth for the middle class, for everybody. It's a fantastic place to be. It's the biggest bank in the world, the investing public, and it's a lot of fun too. So, Mike, let's talk about in regards to that. The recent SPAC conference. You were a rock star there, and a lot of people were talking about the truly amazing transaction that you had with Boost Run and Willow Lane with 0% redemptions. If you could talk a little bit more about that with everybody, that'd be great.
Yeah, look, I think part of that was the valuation was well, placed. I'm not a financial advisor. I can't tell you what would be the right one, but I think the story told throughout the process was a good one. I think I had an IR. We would, lots of announcements come out between signing and closing that showed that they were, developing as a business. That really helped. And so all those things were very helpful in the transaction. And I think that's the story you have to tell targets and SPAC sponsors as well. Just, be smart about it, tell a great story about the business you're merging with, and show that there are huge upsides to it. Because if you come out with a high valuation, it really does cause potential issues because investors won't validate that. And, oftentimes there wasn't a pipe there, but oftentimes you'll do a pipe offering that will help validate that valuation, basically saying, hey, these pipe investors will buy it at $10 and we're raising millions of dollars. And it's based on the valuation you have that you're going to go out with. It helps the story. But if you don't have a pipe, you have to also tell that story, but it needs to be between the signing and closing, which is, several months process.
You pointed out there multiple times about the story. And that's something that a lot of public companies still don't understand. I see publicly traded companies right now on NASDAQ and the New York Stock Exchange that do not know how to share their story with the investing public. And it's such a crucial part. And, I think way back, I mean, even decades ago, in getting companies publicly traded. If I was presenting an opportunity to an investment bank or to a law firm, whatever it might be, often the question was, "Well, Brian, can they sell it? Can they tell the story?" Right? And so that is such an important facet that those that understand, like your clients there, they can really make it work. And let's just look at SpaceX. I mean, it's an incredible story that they've told for years now. And of course, there's proof to the pudding and everything else. But they started storytelling a long, long time ago, right? All the way beginning when they started getting the licenses from NASA to do certain things. It's so crucial.
It definitely is. So I think make sure you have the right PR firm. There's lots of advisors in these deals, but it's important. And I think, especially if you're a smaller company, not everyone hears it. SpaceX, obviously, people had heard of it. But if you're not somebody that hears about it and you sell widgets or you sell some sort of service, make sure people understand why and why you do what you do and then what you do. And I think that will resonate with folks and investors, truly ones that want to hold as opposed to just doing arbitrage on it. So I think it's certainly an interesting time. I see the basketball stuff in the background. I know you're a big basketball, Brian. So real quick, Madison Square Garden Sports, public company. Interesting, watch the Knicks win the world championship. If you look at their stock, it's publicly traded, it's been up almost 50% since February. So it's just interesting little factoid that sports trading publicly through MSG and all the sports there is interesting to watch the kind of growth. I found that fascinating. Obviously, valuation the Knicks goes up. They win a championship first one in 53 years. But I'd love to get your take as a basketball fan, because I know you're a big one.
No, I mean, that's a perfect example of the value of being publicly traded. The Knicks, let's just talk about even going to the ownership, the Dolan family. The Dolan family, yes, and obviously James Dolan had a lot of controversy over the years, but he figured it out. He learned, gave the basketball operations, he got out of it, he gave it to the right people, and they made it work, right? But they wouldn't have been, the Dolan family wouldn't have been able to buy the Knicks in Madison Square Garden in the first place if they weren't running a publicly traded company, if they had not taken their company public and had massive liquidity events and having access to capital and knowing how to do everything, they wouldn't even be in the picture. And that's something again that a lot of people just fail to recognize when they have an enterprise and they're thinking is, well, yeah, I can sell it to PE and get my exit that way. So just remember that the PE firm, they're looking to get an exit as well, and that's either selling it to a larger PE firm or to take it public, right? And when you have a publicly traded entity, you can do more. And the Knicks have shown that and have done that. And what an amazing run. And as far as team and everything else, that's another part too, is you talk about the need to have the right advisors, the right people in place, the right team members. The Knicks had it completely covered. You know, they had a coach, Mike Brown, who, when hired, I'm sure a lot of Knicks fans weren't happy about it because, well, what did the guy win? What has he done lately? All these questions. Oh, he's just been an assistant. But you know what? He figured it out. He learned along the way and he had his time to shine and he made it work. And he got those guys to work and play as a team, subjugate ego where necessary, shine when they have their opportunity. And what an amazing story.
Absolutely, total total story about teamwork and leadership, and making it work through adversity. So fun stuff.
Absolutely. Well, Mike, thank you. Congrats again to all the recent successes and looking forward to hearing about more and working more with you and everything else that we're working on. And until next time, this is Talking Capital Markets. I'm Brian Jue.
Now, Mike Blankenship.
Until next time, have a great day.